Good now, everybody. Thank you for joining us, and welcome to the second official episode of Trust Issues, the new show that we're starting here at Rise Up, wherein we discuss in depth, at length, all of the wonky policy and legislative happenings or lack thereof that touch the crypto industry, things that are directly related, things tangential. If you have any questions about the state of the regulatory landscape, about things that we would like to see, opinions, all of it's welcome here. I'm super excited about it. We're joined by
Debunking common tropes that people like to repeat that are very not true.
absolutely, yeah. Today's theme, if you couldn't tell, because I made a video about it earlier today, in preparation for this, there are a few things specifically that just get bandied about every single time I see someone talk about it when they're a little bit ill-equipped to have the discussion. And I just kind of want to do some debunking, and Emily is joining us, of course. This show really probably wouldn't be on the air yet if it wasn't for Emily, so that's super exciting. I'm glad we have you. And yeah, I think we'll kind of just get into it. So Emily, I'm going to send it obviously to you first. So the first talking point that I really want to hit on, because it's the biggest, it's the worst, and it means the least, is as soon as we get regulations, we're going to the moon. Why is that nonsense?
Mike, I love that one. But actually, the very first talking point is someone was asking about my background, which is vintage wallpaper. And if
Fair.
there's more on the planet, then I would have bought it. So I don't know. Sorry, bro. Okay, so why won't crypto moon when we get regulations? It comes down to eliminating opportunity. So I think what the kind of the first order thinking of that is that if it becomes easier to buy crypto in America, more people will buy it, and I think that basically sums it up. But the thing is that one, everyday Americans do not actually have that much money compared to top money globally, exclusive to the United States. We make up a small, a minority of the wealth. And I think that's really important to understand. It's really easy to forget. So even if crypto were to gain 100% adoption in America with your everyday people, it's just not going to move the needle very much in the first place. I would say the second most important thing to understand about why this narrative is false, the narrative that, oh, when we get regulation, crypto will moon, is that it's eliminating a tremendous amount of opportunity. The difficulty in being able to successfully create crypto products means that it's a narrow market, right? You have to have a lot of knowledge to be able to get a crypto market or a crypto product off the ground. You also have to have a tremendous amount of knowledge and money around doing it currently legally, right? And this is a huge moat. And by having this huge moat, you're limiting the amount of products that can actually be launched and be compliant. And that knowledge, as well as that border arbitrage that it takes, is the actual financial opportunity. So the opportunity will effectively evaporate as soon as the regulation is strong enough. Prices will level out very quickly. And it won't be as advantageous to be an early adopter. And like, I think it's fair to say that early adoption passed us by for Bitcoin's been since 2009. Ethereum's been since like 2016. Like these are old products at this point, and the prices that were made on them was, those gains were tremendous, right? Like, and I think it's really awesome that there was enough people out there who saw that opportunity early on and held on to it and waited it out. But like, regulation will not recreate that environment by any means. Regulation will eliminate that environment, and it will turn these products into basically your kind of everyday stocks that pay dividends more or less. The thing that I think is most important to understand about any blockchain and any crypto product, about how crypto products actually make money, right? How a blockchain makes money comes from utilization. So making things easier to access for somebody, right? Removing the friction, but also increasing transaction volume, and increasing the oscillations in price. That's where the opportunity comes from, because that back and forth arbitrage rebalancing, especially on volume, is where you're able to make money. And that's where people that understand MEV and understand how to bot things, right, and paint the tape, all of these things that happen in market making, that's where they absolutely flock to, because that's where the most opportunity is for their capital. And they do diversify by doing these behaviors across chains, but they're going to the chain that has the volume. You can't effectively arbitrage or effectively market make without volume behind it.
So you actually kind of took this in a bit of a different direction than I had in my head.
Oh, my bad. Sorry.
No. I like it, because I think we should hit all of it. So to your point, I think you're talking about things that, and correct me if I'm wrong, you're talking about things that we would theoretically like to see and haven't seen yet, as opposed to the fact that there are quite a lot of rules in place that touch this industry in one way or another, that sort of cause a mess, make it extremely difficult to figure out, which bucket do these different kinds of things land into. My go-to example, which I won't go into, people have heard me whine about it for ages, is like the tax conundrum. And of course, Senator Lummis has the Digital Asset Tax Fairness Act that's in Congress, technically, it was proposed, it has no support and it's not moving anywhere.
Yeah.
One of those things that dropped over the summer that 8 people have heard of. It's interesting, worth a read. It's probably not going anywhere, but I think both are worth talking about. The first thing that I always think when I hear someone say that is my immediate follow-up question for you is, okay, you've just told me that you think price action depends on regulation. I think the way you described it is interesting, because there's two things that sort of butt heads in that exact moment, right? You have this idea that, okay, if the institutions show up, or the masses, thanks to some sort of clear-cut regulatory framework, and everyone wants to buy stuff now because they feel safe, that's going to move the price needle. Because ultimately, when you ask a question that leads me to this talking point, you're probably asking me, what do I think the markets are going to do by the end of the year? What do I think they're going to do next year? Where do I think this or that or this asset's going to go? And Emily, one thing that really doesn't make the rounds on Twitter, but that is a huge topic of discussion on TikTok specifically, is the ISO 20022 compliance narrative, which is, it's a rich data messaging standard used by financial institutions to send, rich data back and forth to each other. It's the standard they have to adhere to send those messages. There are some cryptocurrencies that have built some sort of messaging compliance with those, and so the rumor mill likes to take those and say they're the ones that will define the new financial system when the great switch is flipped, or the master reboot is hit, or whatever. So all of it kind of runs into each other when people bring up this topic of regulation as a vague platitude.
Yeah. Well, I think someone said, "Who's the liberal lady?" What's that, bro? So I think everyone is trying to get their edge, right? Everyone is trying to get, the alpha, the information that's going to, help them make the right pick. That much is obvious. I think what it's missing out on, though, is even if a coin is compliant, what is it doing? What's its purpose? Does it have a reason to actually be traded? Are people incentivized in any way? Or is this, kind of like collecting state quarters, right? I think that there's a lot of things that people need to be aware of when it comes to what actually makes something valuable. And I can understand why someone's trying to basically do the equivalent of a fundamental analysis. Oh, this is more compliant. This is more likely to make money. If we have regulation, then everyone can make money on this and adoption will be greater, right? There's a lot of noise, I think, that is important. And I think one of the most challenging things to sort through is getting rid of that noise, right? We're not talking about the stock market. We're not talking about fundamental analysis, because those are not equivalent to how money is made in blockchain or in crypto. So if you're trying to do something like a fundamental analysis, right, and you're looking for a compliant token as a reason to buy, right, or as a part of your investment thesis, I think that it's basically like a I mean, I don't think false equivalency is the right word, but like these things are, we're talking apples and oranges, right? Like I think it's important to talk about like what the stock market actually is and why an equivalent standard of evaluation doesn't make any sense in crypto. So if you think about when a company goes public, they're offering shares of their company that you can invest in, but the value of those shares is determined by market demand. The value of that share is not determined by the actual success of the company, right? It's entirely about speculation. It's how successful is the marketing and the PR teams based on the actions of those companies, right? And then the secondary utility, I guess, of having your company publicly traded is like, one, yes, you're allowed to speculate. And two, it gives the investors and the executives a huge bag of money to go and make other investments on or make other bets on. It's about accelerating wealth. It doesn't literally equate to the actual value of the company, right? This is a PR move. And I think, it's important to acknowledge that there is an old adage where like, oh, why is a company doing it? They're doing it to deliver shareholder value. That entire concept of delivering shareholder value is a carryover from when these companies actually had, oh my God, what's it called? Retirement funds, pensions, your pension fund, because the majority of your pension fund would have been invested into companies' stocks. So you as a worker for that company are going to want to do your best, try hard, stay there for the long term, right? Because it creates a higher quality byproduct or like product, right, of what you're making. But also these individuals are investing in their own future through the pensions, except that most companies have eliminated pensions, right? So it's no longer in the interest of the shareholder, which would have been the employees, right? It's literally in the interest of the shareholder, which is make it as capital efficient as possible. And that involves cuts to quality, cuts to employment, benefits, all of those things, right? Okay, so that's the stock market. That is entirely different from crypto. Crypto is really based on volume and consumption. Okay, so if the chain has the things that I want to interact with, right, I am creating volume on that chain. If I am running right to a place on chain that a lot of other people are currently utilizing, then the price of that token will fall out of sync with its dollar peg, right? With its USDC, USDT, because you're creating a squeeze on the network coin that is used to generate transactions. Okay, so that volume that's created by having products that people are absolutely flocking to is what actually increases the value of the blockchain token itself, right? And that's how you can differentiate between the value here. And that's why I think a fundamental analysis of something along the lines of, is this token compliant? Does that give me an edge? Is kind of a red herring in this case. I think it's an easy narrative if you don't start pulling it apart, but you have to really question yourself, like, is this actually aligned with how money is made in crypto? And it's 100% not.
Well, there's two. So this particular like train of compliance is, I would say, even more of a red herring because it's kind of like packaged up. There was a comment about another project that has made some rounds on TikTok called Zbeck, which is like a streaming payment. It's like a Sablier competitor.
Okay.
It's a payment streaming service. So, and you can smart contract the terms and conditions of a payment to be provided when certain conditions are met. It's basically just, it's a colorful bow wrapped on top of basic smart contract operation, which is why
I love it. It's cute.
Yeah, it's why I've warned against. It's a good product. Like, the thing works, but it's sold as if it's like hyper unique when, like I said, look up Sablier. There are existing frameworks for this to be done, and plus any blockchain that is smart contract compliant, or excuse me, can host smart contracts, you could build this on pretty easily. But something becoming like compliant with this particular ISO standard is very easy.
Programmable blockchain lets you do a lot of things, right?
Certainly.
So.
Yeah, I mean, my favorite example of this whole thing is a friend of mine who's an engineer, Adriano, shout out. He did a video where he built in like the code that would make Ethereum ISO compliant, and it took like 2 or 3 minutes. And he did it like with ChatGPT. So,
Yes. Sorry, I'm still here.
Rip. So, just to say that something wanting to add that in, it's kind of like hey, should we be compliant with this? And someone can be like, sure. And then 30 seconds later, it's added. But we can bundle it up and package it as if it's like this kind of groundbreaking advancement. And that's sort of one of the things that plays into this idea of crypto speculation. Don't do that. I should have told you. TikTok hates it. Everywhere else is fine, but TikTok's going to nerf everything. Pause while we wait to see if they're going to get me.
That's my inhaler.
We're pausing for dramatic effect.
Sorry, prescription inhaler.
Sure
I swear.
Anyway, there it goes.
My bad.
There it goes.
How do they do that? I don't even know.
There it goes. All right. Well, Emily ruined the show for everybody, but it's okay.
I didn't ruin the show.
TikTok just sent me a notification that was like, "Hey, you should kick this guest. Do you want to?"
Should you kick me and re-add me? Is that good? Will that help?
I don't think it's gonna matter. I mean, we'll see what happens. I'm not gonna restart. It's not worth it. That's a whole hullabaloo.
Okay, whatever.
The recording's fine and all that. We'll figure it out. It's fine.
YouTube still likes us. My bad. I'm so sorry for doing something perfectly legal and compliant.
Listen, I should have said it because TikTok is like really fickle. And
My
every now and then
goodness.
we'll get to the end of a show and it will just be like, hey, you were restricted for X, Y, and Z. And then we all sit there and try to figure out like what on earth could it have been that led to that? Because it never gives you like a clear.
It's
not
matter. Like I said the C word. Anyways.
It's not about that. You probably could have, and it wouldn't have done the same thing as if it saw you take a sip out of something it couldn't identify or take a puff of something.
Well,
Yeah,
sorry everybody who won't get to see this. Hopefully the people that want to see it know where to find it.
Anyway, that's kind of why that particular. So we're sort of blurring lines between different talking points here. So just to kind of regroup from where we started. First, this idea that there isn't regulation or that's just what we're missing is definitely, I mean, there's a lot of red herrings here. That's a pretty red one, just because one, it does exist. We have it. We've had it for a while. It's causing some problems.
Yeah. Okay. So like, I think another way to dissect this argument would be to look at who is the biggest proponent of the regulation, right? And what that comes down to is centralized exchanges, right? That's who's asking for regulation. And, you can see how, as a business, they are requesting more regulation so they can push the boundaries further. You're also seeing how there's a lot of companies, out there that are doing really illegal stuff or stuff that has been determined to be illegal, but they've raised enough money to change regulation in their favor. So like, I think that these points are really important to understand when you're saying, oh yeah, regulation will send us to the moon. Regulation will bring the masses. It's got nothing to do with regulation. There's plenty of entirely unregulated industries that do amazingly well. Point in case, natural supplements, entirely unregulated. And those industries absolutely boom. And it's because they have exceptional product market fit and a very good word of mouth stream of information, right? Around, oh, this thing is great. This thing did so good for me. And I think the equivalent of that is on crypto. It's more, look at all this money I made, right? Or look how easy it was.
That's a good misconception to linger on, because tokens are different, right? There's a whole myriad of different reasons you might create a token to represent a thing. However, they do have this unifying theme in their accessibility and in the fact that like DEXs can host them and they can be traded, swapped, right? That they should all behave the same when it comes to what can skyrocket in price. Because it's possible, it is technically possible for any cryptocurrency, insert your favorite one here, to rocket in price. Very possible. It's built in such a way where that's a thing that can happen. Should it happen? Different question. I always like to put a few things like into a bucket to compare, because we usually look at them side by side. They're listed that way on CoinMarketCap, CoinGecko, CoinCarp, whatever your go-to coin animal is. And, so you might see Solana, you might see Chainlink, you might see Zcash, you might see Monero, you might see a stablecoin, all listed in the same, list of things sorted by market cap. We're applying the same metric of measurement to these things. And then assuming, because we also then track, 1 hour, 24 hour, 1 week percentage up and down price movement, that, okay, this is how we need to be looking at these things, which then starts to walk you into this little box of judging all of them based on price action. And I think Chainlink is a great example, because every day, it's a meme, right? Every day they sign 17 new partners. Everyone's using this thing for something. The token price famously is just pretty boring. And it's really not the point of that particular token. I mean, in no world should a million different tokens exist to represent a million different things, and all of them just sort of like arbitrarily skyrocket because a rule is made that can't, by definition, touch all of them or even matter to most of them. Yet the existence of that could fuel hype, which could fuel speculative price runs. And so it kind of all gets lumped together in this box of like misfit friends of metrics that don't matter.
Yeah, and I think a lot of people don't even understand. So, you brought up Chainlink as an example, and I think that is another really excellent example of people not understanding how the chain of commerce works in crypto, and how it is unrelated to the price of the token, which doesn't mean that the price of the token might not be the target, or it might be the target, right? But it might not be. There's other ways to make money in crypto, right? I think a lot of the models that people are basing their information on has to do with the traditional, I give you money, you give me a good, that creates scarcity and the price goes up, right? And because they expect that scarcity to be the driver, right? It's like basic supply demand, what you learn in middle school when you're starting to consider economics. It's not about how it actually happens and, what the token itself does and how it interacts with what's going on, right? Chainlink, you want to be a validator. That's it. That's how you make money on Chainlink. You don't make money by buying the coin, you make money by being a validator, right? Because the entire point of Chainlink is to get information into the blockchain in a way that's non-fungible, right? They're doing it with the weather, they're doing it with stock prices, they're doing it with, price of goods, they're doing it with services, right? And if you look at who their validators are, they're all of these companies that their entire business absolutely boils down to data. And that's how right? You can look at it and you're like, data, this company's goal is aligned with people consuming a lot of data. Now I understand. I wouldn't buy Chainlink to make it go up. Also, getting data from Chainlink is crazy expensive because there's not enough validators on it, right? But they need more tokens out there. So they're going to balance it out every single time because they need more people participating in order for Chainlink to be truly successful. So you can't buy it as an investment, right? If you buy it, if anything, you need to stake it because more people are going to be buying it or start putting a liquidity pool. So
but see, that's kind of my point, right? Because more people buying it and speculating on the price hike could move the price of a thing up, even though in no way, shape, or form are people uninterested in providing validation services to the Oracle network that is Chainlink. In any way could that be called success of the network?
Right, because they don't understand what the purpose is. Because I think most people come into crypto and they're like, people made a lot of money in crypto, I want to get into crypto. That like that's ultimately what motivates people. So that's a really tricky thing to get past. And so even if you talk, even if you're hearing that standard thing where it's regulation will make my bags moon, right? That's not about actually utilizing crypto. That's about dumping and running. That's not like what that's the motivation is to get rid of your stuff. It's not to it's to, oh, I can turn a profit on this. It's entirely like a flip job. It's got nothing to do with the actual like value of the contribution. Like
well, and two, it can actually be relatively antithetical to success of the network in a world where Chainlink goes up, by 1,000%. Ultimately, what does that do for the actual project, the actual point of the whole thing? It makes it harder.
Right. So okay, that kind of brings me to XRP. And I realize this will be controversial even in our audience. And I'm so sorry if I make somebody question their reality right now.
No, please feel free. And just know that, in general, we can definitely talk about the nuance, whatever. I don't know. I actually don't know where you're going to take this, but hit the nuance too, wherein a speculative price increase of an asset making investors rich really doesn't have to have anything to do, and often doesn't, with utilization of a thing for its quote unquote advertised and intended purpose.
So the biggest misconception I think that people make about XRP is that the utilization of the network will generate value of their token. And that's really challenging because that is true about every other blockchain, but that's not how they do it. They're entirely separate products.
Yes.
The token itself has been abandoned, and it has been abandoned for many years. And people come in there and they're like, oh, all these banks are using XRP rails to run their stuff. I should buy some XRP. It's like, no. Those are unrelated. And that's how they came out the other side. And not only that, it's literally XRP.
Well, the terms to look up here would be the difference between XRP as a specific thing, the asset itself, the token.
Yeah.
To dig into instances wherein, and I would challenge you, beyond pilot programs, the token itself has been used in settlement. Compared to
the token is not used
outside of a few pilot programs. I know.
Yeah.
Compare that though to utilization of RippleNet, which is independent of the token XRP. Entirely
unrelated.
Yep.
And people, the company Ripple made XRP, so it must be the same, right? It is the closest one to speculating the price of a stock, except you will never get a dividend. Also, it's
That's
just really irritating to use because they stopped developing for it a bazillion years ago. So their wallets suck, and no one else is integrated with it, and it's a completely unique language for the chain, and it's just
that's a money saving move. And for the record, just in case anyone thinks I'm unfairly biased, because I always get accused of that. I was actually involved. What year was this? 2022, in the building and development of a game and a token project associated with that game, specifically built on the XRP ledger. And it was kind of moving through that. It was in concept stages in 22 and then went into existence. It was actually created and existed. If any of you are familiar with Ragsy, Jessica, creator on TikTok, she's an artist who is also involved in crypto, did a lot with NFTs conjunction with her artwork, and then has also now assumed the mantle of, resident degen and meme coin trader and casino aficionado, proudly.
That's fun.
She's very nice. I
like a casino.
We constantly run into each other at conferences, and it's become a joke. She gets commissioned to build huge Lego sculptures at a lot of crypto conferences, and so the last time I saw her was at Consensus, and just she was building a gigantic Lego Brett for the meme coin.
What a fun job.
right? Oh, and she's so she's so good. She's incredibly talented. But what the so she built this thing using the XRP ledger because that's where the grant had come from. They were doing a push to try to
and
attract.
then she was like,
yeah, I mean, it existed, it worked, you know, but it was relatively rudimentary, and then it ended up going nowhere. Even though, and the thinking at the time was that, okay, look at how much excitement there is from people who hold this token, because that holder base is humongous.
Oh, gigantic.
And no one was really that interested in doing stuff with it.
That's because the type of people who buy it are the type of people that get shilled at like the reception after church.
Or exactly what you said the first time, someone who's more interested in the success of the company behind it, treating it sort of like a stock.
Yeah.
And behaving that way, because that's honestly how it's framed.
That is right. Okay. And the trouble with that is that mindset is not popular enough, nor are there enough people in that cross section who are in that like happy spot, right? Like it's kind of like a spectrum of education, right? So there's people who like know about stocks, don't know about crypto, get into crypto, start applying their stock knowledge to crypto. Oh, this looks just like a stock. This makes the most sense than anything else. I'm going to buy some of this. Oh, I see. That's not actually how they'll ever make money. These are totally unrelated. I'm going to dump my bags right now. Right. And I think all we saw was a huge stampede into this region. And like, that's okay. There it is.
Mm-hmm.
Anyways, somebody in the comments that I caught at some point was like asking about like, why is regulation bad, I think. And like, I don't want to say regulation is bad. Regulation is not bad. There are many things in this world that I am so happy that they are regulated, right? Like,
okay, wait, before you tangent, I want to set you up to include this in how you're going to describe this, because one of the points that I wanted to make, this came up on the live stream with David yesterday. The point that I was trying to make to the group.
Since you said the name.
I know. Well, you know, it's not Voldemort. I'm just saying the point that I tried to make, which unfortunately we did not get, we didn't get to stick, and we didn't get to linger, was that we have to look at motive behind the rule. And so the Genius Act, as a thing, I usually would take that as the comparison. So let's dissect that a little bit, not literally us right now, but in general. So like take that and understand it, and then look at the time frame and how long it took for it to go from proposal to signed into law, and then take something else that would be more of like an open-ended, like defining piece of legislation, something like clarity, and put that next to it, which has now, just for the record, been in the houses of Congress for the exact same amount of time that Genius was before it was signed, and we are still in the Senate. Like it has to go through there, finish, pass that, go back to the House, be reconfirmed, be finally, finalized and sent off to the desk. We're nowhere near that. We got a long way to go. I saw speculation that was like going to be done by the end of the year. Not a shot. No chance. So the motive though is completely different. If we were to define the motive behind Genius passing, it's easy. There's huge lobbyists. They stand to make a tremendous amount of money from the framework that Genius provides for them over the next however many years. There is, that motive does not exist for those lobbyists or the people who stand to benefit from lobbyists benefiting in Congress from clarity. It just doesn't exist. If we were to get something like the brokerage defining rule, the terms and conditions of self-custody, and basically the like acknowledgement of a government to not touch the right to self-custody, that kind of thing. There's no motive for that to pass. And so if you want proof that the people making these rules are not on your side, I would pose those two examples. Look at Genius and the motives, look at clarity and the motives, and then tell me that the most divided Congress in history somehow came together to get Genius through, but can't get clarity through. Make that make sense.
I think the easiest way to summarize that is that the money is in the gray area. And like, that's it. That's where it comes from. And by eliminating the gray area, you eliminate the opportunity. And the people who push that through or had their lobbyists educating and pushing it through are not the same people behind Clarity. Like, that's it. It's not it. And I guess no spoilers for next week, so I'll keep that thought to myself. But yeah, I think that's
give it a teaser.
Okay, so I think it's really important to just consider World Liberty Financial as a business and what they do and what their actual services are.
And the timing. I would throw the timing into that.
Sure, yeah. I mean, got to be right time, right place every time. But yeah, I think that is something that escapes a lot of people when they are trying to make sense of what's going on. And it shows. Yeah.
No, it does. Yeah, I think that we kind of tossed that out as homework after last time, was comparing and contrasting like the time frame. And we're specifically with regards to World Liberty, at least this is how I'm looking at it for Genius specifically, is USD1. The specifics are on there, like what's unique about that one? Why is it special right now? Why is it being talked about? What does it have to do with Genius?
Clarity, if I'm right, invalidates the most popular stablecoins, or it makes them non-compliant, right? Yeah. So who wants to make these tokens non-compliant? I think that's like a really important element. Okay, so I literally have it tattooed on my hand. Who benefits?
Which is so interesting because like we were talking about on the morning show today, in a world of stable coins, what's the favorite to FUD, right? Tether.
Yeah.
It's the mark of a specific point in every cycle of crypto when everyone's like, hey, wait a second, we haven't talked about Tether defaulting in a long time. Let's talk about that.
Tether hasn't depegged this year. Wonder when it's going to happen. Is that a Polymarket bet? I'd make it.
Oh, I'm sure it is. I haven't looked, but I'm sure there's a call sheet and a Polymarket on that.
Yeah.
The interesting thing about that though is just like the conflict of interest between what Genius builds and legitimizes and who also doesn't want Tether to face any problems because Tether is a massive buyer of
Who's that? Who could that be?
Who could that be? These are important questions that deserve to be asked.
Someone avoided getting extradited? I don't know, maybe.
Couldn't be.
Maybe.
Okay, so I think that it's totally fair, and I would never decry this. I think that this is a totally legitimate reason to be interested in crypto. The ability to invest into something early stage and reap the benefits of being hyper early to something incredibly risky and having it pay off. I think that's fair. Plenty of people have speculated on a thing. The reason that I really wanted to have today be about this was because when something is this new, when something is as I don't want to say misunderstood, or we just haven't even gotten the chance to properly understand something yet, the potential to mislead somebody with information that sounds great is very, very easy. It's so simple. Like
not
Emily
only
and I
is
could
it
sit
easy,
here.
it's fun.
It is, yeah, because you can get so
really
much
fun.
attention. You can build a brand. You can make a ton of money off of driving that speculation and misleading. And you don't, as crypto channels have been proving since the dawn of crypto channels, you don't have to know anything about crypto to get huge. So I really wanted to dwell on this for a second, just because this is becoming more and more of a thing. As government gets more involved.
All you gotta do is get lucky.
It's true. Yeah, get lucky once or twice, hold up examples of luck presented as wisdom. All of a sudden, you are a prophet. And people who just want to, at the end of the day, like be okay and feel like, hey, well, I'm aware of this thing. I really don't want to miss the opportunity. I'm willing to take a lot more risk than I'm like normally comfortable with or aware of. Like, tell me how to do it. And, of course, I can do that. For $49.99, you can buy my ebook, and it will tell you how to make money in crypto.
And just along that line, because I know that's a joke. If anybody is trying to sell you a program on how to make a lot of money, that is how they're making their money. it's a circle.
Treat it
Yeah.
like, what do we say about DeFi? What do we say about a DeFi protocol whenever we find a new one? Number one question to ask about a DeFi protocol: where does the yield come from? If you can't figure that out, the yield's coming from you.
Yeah.
It's the exact same
Always.
concept.
Always.
Same concept. Okay, so
I've
go ahead.
Well, that's just that. I feel like there is a universe where you could argue that Pump Fun is a DeFi protocol for Solana because of the amount of money that they make for Solana based on paying rent on the tokens in your wallet and like the squeeze it creates when a coin goes nuts. But anyways, let's continue.
Do you want to break that down a little more?
Oh, sure.
Why not?
Okay, so yeah. Okay, so what I mentioned, I just forget what you were saying, and you're gonna have to remember. Okay, so what I was saying earlier is that the way a blockchain provides value and makes money is through volume and validation, right? Like that's where the opportunity happens. If nobody is at the mall, nobody's going to come to the mall to sell stuff, right? Like these are very basic principles when it comes to how do you generate revenue. And what I had also mentioned was that when a token is hot and a lot of people are buying it and a lot of people are making a lot of transactions and volume on it, right? And then they put their trading bots on it, whatever, all of this squeezes the network. The network only has so much space to operate. So as the network gets squeezed, demand for the token itself, right, the network coin goes up. When that demand goes up, it creates an arbitrage opportunity between the dollar peg and the token itself, right? And the chain token. So if you have something like Pump Fun, where Pump Fun is always trying to create a squeeze on Solana, Pump Fun is effectively a DeFi protocol that supports Solana adoption because it is decentralized. It is enabling people to buy the tokens. They must do it through buying Solana in order to participate, right? Are you gonna swap into Solana because over here you have USDC on Solana, right? And you need Solana to buy your token, whatever it is. But like that's kind of what I'm saying about arguably it does not present itself that way. Nobody will call it that, right?
Sure.
But like it comes from the squeeze.
Genuine question is, because I don't know, this is how long it's been since I've looked at Pump.Fun. You can is every trading pair exclusively Sol and the shitter, or is USDC on Sol a thing?
So, okay, when I said USDC on Sol, I meant like in your wallet. Every coin that is generated on Pump Fun is a Sol pair. Yeah.
Yes. Okay. I just didn't know if they had expanded or if they're, maybe, I don't know.
I hope they don't. They shouldn't. That would be a dumb move. But so is launching equivalent of V1 liquidity pools. They
added live streaming and we saw how that went. That was also a dumb move.
It's okay. Let them learn for us and we'll study it and pretend like we could do better. Anyways, where were we going? I forget. If someone makes a shirt that says Pump Fun is DeFi, I'm going to be so insulted if you don't send me one. I would like a ladies medium, V-neck preferred.
Nailed it. All right, Johnny, now you have no choice. You've made that bet.
Sorry. Yeah.
Be a good one. Every single year before like the big conference circuit, Evan prints me a bunch of t-shirts that just have pithy one-liners on them that I've, like come up with during the show. Like I'm right now wondering.
What a good friend. That's such a cute thing to do. I love that.
USDC to $2.
That's
well, and of course,
funny.
The amplified inside joke about that one is that, hey, we're heading there thanks to inflation and debasement. So that's not the $2 I meant.
Oh my God, that would be really funny. It'd be like US Mint Classic.
That is a joke that really dates your time in crypto.
What do you mean? That's where we make our dollars. Unless you're like thinking it's something else. I don't know.
I took that to be an ETH Classic joke.
It is an ETH Classic joke.
Okay. Did you know that was my first like major miss? That was like the first thing I really like jacked up when I was getting into crypto, because my thought process was this.
You thought you'd outsmart the founder?
Yes.
Like, what?
Yeah.
No,
I knew
nobody gives a shit that he's from Peter Thiel's fellowship. Fuck.
I knew nothing about any of it. And this was literally my entire thought process in a nutshell. It was, I've heard of Bitcoin, but it's $3,000 and I can't afford it. Ethereum, that's a cool name. It's $80. I'll take some. And then I saw Ethereum Classic and it was cheaper. And I was like, oh, I am a genius.
It's on sale. That must mean it's undervalued.
I'm a genius.
Here's the thing about being undervalued.
Well,
sometimes it's actually priced by the market. And the market said, no, thank you.
Go figure. Well, and then of course, crypto did crypto's thing. And so I'm like sitting here holding this humongous, like way too big bag of ETH Classic.
I'm so sad for you.
Now I'm like doing homework on the thing. This is 2016.
Yeah, forever ago.
I don't remember. And then it like I had it until 2020. And no, 2020. I don't remember. Whatever. We'll just have to look at the chart. Right before that gigantic explosive spike up, right? And I'm sitting here. This is before the rally happened.
Like 17, 18 is when all of my friends were selling their Bitcoin to buy Rolexes. And then they're like, that's it, I'm out. And I'm like, okay, you enjoyed that watch for the 2 million are made of every single fucking year.
Well, and it was just, anyway, the long story short, not to belabor the point, is that I was just like, oh, wait, this isn't real Ethereum. And now I know what Ethereum is. I got to get rid of this thing. This is awful. I've been scammed. And so I sold the entire thing. And like literally 20 minutes later, it exploded. And and I was just sitting there looking at it. And that's the day. That was a pivotal moment in my crypto career. Because that's the day I was like, wow, I've been like sitting here like thinking I was learning for this long. I know nothing, Jon Snow. And it was like back to square one.
Shit about fuck.
Say lovey.
Man, Ozarks is a great show. Anywho, what was the point we were trying to get to? And then I derailed us talking about Pump Fun.
Your guess is.
And then I made an ETH Classic joke.
Here
we are.
Let's take a question and
I love questions.
Use this to frame a comment. So, Chris M is asking about Bitcoin's potential to hit 100,000 back before the end of the year, and I think there's a few things that we can throw into the equation here to consider this. One, no idea. Genuinely wouldn't surprise me either way. However, just remember that at the end of the year, there is always a sell-off because people are tax loss harvesting before the tax year concludes. Mm-hmm.
However,
yes. However,
I would consider game theory in this because the price of Bitcoin is not moving as a result of retail, right? And our like, pithy little tax loss harvesting strategies. The major buyers of Bitcoin, the ones that are making a dent in it, don't give two shits about tax loss harvesting. So that's not, I don't think that applies so much to Bitcoin. I think what it applies to is more game theory, right? If you understand, and we talked about this last week, but we didn't really land the plane on it. But like, if you understand what the Genius Act is incentivizing at its barest, baseline level, then you understand that ultimately, when the Fed loses control of inflation and the dollar devalues in a very rapid way, that every single customer of a bank now has a very easy ramp into actual fucking crypto. And if you are a bank, if you are a huge investment product, right? Like whatever it is, are you trying to psych out, this is poker, are you trying to psych out the other players and get them to fold and dump their bags so you can buy even more because you know of the future that you are strategizing with based on the current regulation? Or do you think we've gone too far? Adoption has happened much faster than anybody could have ever predicted, and it's a very risky time to dump your bags. And those are really your those are really your two options here. And I think a lot of people don't realize how much Bitcoin is in the hands of institutions. And I also, people don't realize how Michael Saylor makes money with his Bitcoin. And I think they believe that he needs to dump. There's always the time dumps, right? Like the BlackRock time dumps, but that's like, literally in the terms of their product, and people always act surprised. It's bizarre, but anyways, yeah.
I think too that it's worth pointing out, just because I think sometimes it's easy to get caught up in like the sensationalism of a question like that and the speculation aspect of the whole thing, just to say that you have competing timeframes too, because you have different types of people looking at this asset very differently, and you don't see that anywhere else. Like if you were to take Apple stock, Amazon stock, something like that, a widely recognized company with worldwide adoption, everyone looks at it the same way, and your opinions are either bullish, bearish for whatever reason. With Bitcoin, you have this interesting meeting of motives and incentives behind the asset. Some people are fully planning on buying, holding forever, and eventually living in a world where, in the words of Doc Brown, where we're going, we don't need roads, except the roads are selling Bitcoin. So there's that. Then there is the people who look at it more like gold. It's a store of value. It's going through its volatility, growing pain phases. It took forever for gold to establish itself as that. Bitcoin is extremely young. We'll get there eventually. I'm buying, I'm holding, I'm in this for years. Then you still have people who are like, nope, I'm a trader. It's volatile. I buy, I sell, I whatever. I'm emotionless. There's that. Then there's people who are more like kind of trying to figure out in which camp they are, and maybe think they're approaching it from a long-term perspective, but really what they want to do is like make a quick flip. And again, that's fine. No shade at all. But it's interesting because in no other market with any other assets do you have a thing where people have such wildly differing opinions of what at its core an asset is for. And I think that's really interesting, because the question you have to ask yourself, why do you care what price Bitcoin is by the end of the year? Are you planning on being out of it by the 31st? Are you trying to plan profits? Are you underwater right now and you're worried about it? Are you trying to figure out whether or not you should save some money to buy more at a certain time? Like, there's so many ways that you could take that question and like how you would answer it, that it's really, really hard to pinpoint.
Yeah, like that's definitely true, but also that's where the opportunity is. And, we were talking about misunderstanding the opportunity. That's a gray area, and the gray area is the opportunity.
Oh, sorry. I was reading a comment. I was prepared for you to talk longer about that.
Sorry, no, that's kind of it, right? Like,
I think
where
you're
people, right, yeah, I think what's really interesting about crypto, and I guess we're supposed to, this is more of our like theoretical show, right, where we like try to really dissect this stuff. I think what's really interesting about crypto in general is that it is a decentralized ledger, right? Or it's meant to be, L2s, whatever. But it's meant to be a decentralized ledger. It's meant to be, borderless economy, all of these things. And the world that we currently live in, even though we have, nation states, so much happens across digital non-borders that it's really a game of like cat and mouse when it comes to this. And it's a uniting factor across the world, but the regulation is the only way that the nation states can maintain an edge in this case, because otherwise they really don't have the same advantage that they normally would in a regular financial product. They want to control trade across borders. They want to control immigration across borders, right? They want to control the immigration of ideas as well. Keeping those things in the borders may force an initial concentration of skilled labor in that area, all of these things, right? But this is kind of evaporated in the world of crypto. And a lot of the beliefs that people are putting behind their personal conviction bets has a lot to do with not understanding what the landscape is enabling. Like these are emergent properties of crypto, and people think of it in kind of a dated way. Um, I think that's also actually says something about regulation and why regulation has taken as long as it has and is going in the direction it is going in. Um, we have, the age of Congress in America is very old. They're on average, I think, like significantly older than like the regular retirement age. Um, and that means that these are people that grew up in a time before what we have as, modern computer internet technology. They missed it. Like I grew up getting CD-ROMs of AOL with 7 free hours of internet connection in the mail every week, right? Like in the Sunday paper. But like that puts me as like a middle of the rung millennial, and I'm 37. So this group of people is just starting to come in there. Gen Xers were fully adults by the time they got a hold of this stuff, largely with like the start of their careers. They were adopting it basically on the fly, but it didn't shape them in their youth in the same way. And I think all of this largely reflects in Congress and in policy and in regulations as we're seeing it. And I think, if people were watching last week when we were talking about the Genius Act, they'll see that they'll see that it was passed with a lot of enthusiasm when normally we have a pretty risk adverse Congress. And that enthusiasm would not have been there if they had a really solid understanding of the impacts it would have.
I want to ask you for your thought on that, because we've kind of hit it a few times, but not specifically addressed this one point. What do you think? Like, if you were to share an opinion, or, feel free to lace it with insight if you have any.
Mm-hmm.
We know that Congress people don't read the full bills when they pass stuff.
That's what lobbyists are for.
Right. I mean, yeah, you got staffers that write them, and then lobbyists tell them what to vote on, and there you go. Has very little to do with the will of the people that elected them to govern. We know that. This is not unique to crypto.
Right. Yeah.
Do you think it's as simple as that for Genius? That it's just, this is what the lobbyists wanted right now, and so it's going through? Because I'm very hung up on the idea that the Congress allegedly right now is the most divided it has ever been, governing the most divided country that we've had in a very long time. Mm-hmm. And it's interesting because we purport from the top down to be interested in making the United States of America the crypto capital of the world. Vague platitude, means nothing. But that's the bumper sticker. And so you would think that go ahead.
The crypto capital of the world. I just talked about why that is nonsense. But anyways, continue. Sorry.
My question is, do you think that it's as simple as that for Genius? That that's just the will of the lobbyists? It has really nothing to do with any underlying desire, ulterior motive to do something specific for crypto. This is just a great way for some people to make a lot of money, and it was easy to dress it up, and there was enough hype and interest in crypto at the time to give it, fucking some interest on the floor and get enough people in the public eye to think they wanted it and that kind of thing. Like, do you think it's that black and white, or do you think there's more?
I think that there is a flow of goodwill that happens more in one side of the aisle than the other. And with the inauguration and this being on the table and appearing at first glance to seem very, very intent on preserving America and the American dollar, I think that is what caught people up. And I think that there's so little general understanding, even in people who are active in crypto, about how crypto makes money and where the opportunity really lies, that it tricked them. I think they got tricked.
Yeah, because I'm inclined to agree with that people who have because honestly, you could draw a pretty easy comparison between crypto influencers and now on paper crypto friendly Congress people to say that the hype to be into this is there. I'm focused on re-election or increasing my follower count. I do not understand this thing. I'm going to ram some stuff through without really reading into it.
Yeah, actually seeing the crossover of congressperson into KOL, like where it definitively, yes, they should be a key opinion leader when it comes to like America, but like watching the crossover happen onto something like Twitter has been like one of the most dystopian things I have ever witnessed. But it is
get a brownie
impactful.
Point for that one, because I have to stop you before you get away from that point because it's perfect. Tweet that. I've never framed Congress people as KOLs, but that's totally what they are.
Yeah, absolutely.
I love that.
However, like it was a really important strategy for gaining awareness and support with people that are chronically online, right? Like I'm not checking C-SPAN on a regular basis.
You're not?
Because it's boring and horrible. Okay, so anyways, no, only if they're doing something really interesting, which is, never. Okay, so I think elections are definitively a popularity contest. It very rarely has anything to do with how intelligent somebody's ideas are or their ability to gain support across the aisle in order to get something passed. It is a popularity contest, and I think that makes perfect sense because they're supposed to reflect their region, right? Like their district. And if you are not winning a popularity contest, you are not going to be elected to represent these people. And a lot of the times I think that it's just a lot, right? Like when you get the election booklet in the mail, it's thick. It's a book. And like you have to read all of these, and these things are just summaries, right? And it's literally written by your campaign team, what your little blurb says about you as an individual, and then you have your party listed, and that I think is truly detrimental. But how else do you simplify the complex process of elections and bills and stuff that you're voting on without digesting it down
to an ever decreasing attention span?
Yeah, exactly. And if someone is even reading that booklet, which is big and has a lot of information in it, but does not have all of the information you need to make an informed decision, who are you looking to help you form your opinion?
Mm-hmm.
Like, it's
KOLs. Of a flavor.
Right? Exactly. And, these...
I mean, to your point, though, this election was the first time where the podcast circuit was more important than the, official debate circuit.
That was really fascinating to witness.
Right.
I think there's another piece to this that we haven't quite addressed also, in that comes down to like, did people stop caring because like our education got so bad, or did they stop caring because they don't realize that it has impact, or they stop caring because you used to kind of get hit with the news all over the place, and social media has absolutely removed that from context, and then people are using social media as news, but social media is not news. Social media is like sent through the meat grinder and repackaged as something else, and people are considering it fact. But the degradation of news and the news cycle went away when the fairness doctrine was eliminated for not, respecting free speech. But free speech is not about, being able to sell people absolute lies that are spun up as, my opinion presented as fact. Free speech is meant to protect you from not getting thrown in prison for speaking out against the government. Like, anyways, it's just like bastardization inception.
That is another point that I tried very hard to make during David's live, was the fact that you can ask that question and give 17 potential, you know, whatever the plural of impetus is. I actually don't know what that is off the top of my head. And, you know, try to figure out like which is the one that like most heavily contributed to this problem, whatever it is. And I mean, as always, the answer is nuanced, and there's lots of different things that are true at the same time about the thing. And it's very hard to pinpoint like the one that maybe tipped the first domino. But at this point, you just have so many things that contributed to this. I mean, you know, you could root it down to, like I said, a short attention span. Okay. What does that mean for this? Well, it means you now have to be way more entertaining to keep interest in a thing. And now you're like faced with a decision like, well, should I try to lace educational material into the thing so that at least the entertainment is informative? You can't really do that, because then everything is now tracked down by the half second with regards to retention and metrics, right? So, okay, where am I losing the most people when I try to take a break from the heavy entertainment and lace in the info? Okay, cool. Let's cut that stuff out and focus still on the bam, 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 bam of like high, just highly impactful entertainment.
Yeah,
whatever that is for that thing.
You're going to be optimized out of having an individual unique thought, and you'll say thank you for it.
Right. Well, because also it serves no one to have a unified group of people in a world that is exclusively built between two groups fighting. The only reason that anyone gets to be a thing is because whoever wins the fight. Like, it doesn't have to be a fight. You know, have you ever, I don't know, watch an election wherein everyone's like agreeing with stuff on stage, because the difference between their party is like one single implementation philosophy on one single policy, and not like some sort of earth-shattering opinion about which humans deserve rights. Like, it's a completely different conversation about how would you vote for whoever. And crypto getting added into the whole thing, it took this thing wherein people now were voting as a single interest voter in something that was really tiny and very nuanced, and the political machine can grab crypto as a thing that they know is super sexy and will get a lot of attention from a small group of very loud, chronically online people who definitely have the potential, just like the evangelicals, to sway an election if you can convince them that, hey, this is the thing in your interest.
I'm about to expose myself so badly right now. Okay, so I think a large portion of the crypto market currently are people that were harmed a lot by COVID and the COVID lockdowns. And I think they lost jobs, they lost savings in the stock market, even though there were like a lot of protections put in place for people who were out of work. In California, unemployment was like 6 times what you normally get, like crazy things like this. I think a lot of that slight was taken personally without understanding that, you know, what the CDC and the government was trying to do. And this was Trump's presidency. What they're trying to do is keep people safe while they got a better understanding of what was going on, right? But like, people don't see it like that. They see that I lost my job, or like I can't go to work, or like my business is shut down. This must be fake. It's very easy. It's very mentally easy to make yourself a victim in a scenario that you are harmed as a bystander of, right? Like, this is not a personal attack.
Yes.
This is affecting a lot of people. This is going to harm a lot of people. What we're trying to do is harm reduction, right? But I think people take that personally. And I think that that is a huge component of a lot of the extremist views that we see. I think they're coming from a point of hurt and a point of anger, and ultimately it comes down to people that feel that their opportunities were taken from them and given to someone else, not that they benefited from the setup of a society that, you know, evolved over time, and that as it has evolved, opinions and strategies to make things more competitive has resulted in it being harder when the room was less crowded. And like, I think that just drives so much of this. And if you're in if you're able to position yourself as an elected member of Congress, as the person who gets you and is going to seek revenge on your behalf and is going to make things right, and it looks like a particular way, right? Like that is motivating to get people to the polls. And if, like, how much more likely are you to leave a bad review after a horrible experience than you are to leave a good review after an amazing experience? Most people feel slighted, want revenge, go and leave a horrible review. If they had a great experience, they felt like they deserved it, right? Like that's what I pay for. This is exactly what I want. I'll go back there again, but I'm not going to tell anybody about it. But the act of being like so mad that you have been slighted, right? Like I'm the victim in this situation and this person is going to make it right for me. And that, I think that drives so much. And it's a very, very easy emotion to capitalize on. And I think it's hard for a lot of people to gain that self-awareness and realize that they are being exploited, probably for the financial benefit of somebody else.
I mean, you said it, misery begets misery. And when something has happened to you that creates that feeling, and you can either be coerced into believing it or you can believe it for some other reason.
It's confirmation bias.
Sure, but you can identify like a scapegoat for your misery, then
everybody
why
wants a reason. Everybody wants a reason, right? Like I feel like it's really apparent in highly religious societies, and I don't want to get into a talk about religion, but having someone to blame or having an explanation is so valuable to people because it deburdens them.
Yes, but also I just always think if you are being repeatedly told by someone to think a thing, instead of encouraging you to question the thing that you're thinking, then that should really be the main focus of like your investigation that should be the thing that drives your curiosity.
Your oppressors are never, ever, ever going to give you the tools you need to escape, ever.
Okay.
They will tell you what you need to be told to stay exactly where they want you.
So let's end with that as a concept, because I think that perfectly fuels the conversation about just to bring it home. That genuinely, I think that fuels the conversation of regulation in crypto, because let's take DeFi. DeFi, I believe, is the point of this whole thing. That if you look back at the original impetus for the original white paper, it was quite literally to set up the foundational layer to build the system that we now know as DeFi. Which, to be honest, lately this is the hill I'm going to die on. So you actually don't need, by design, a bunch of rules and regulations organized by a central authority in order to create an environment wherein DeFi can exist. Yeah. The thing about DeFi is, what's its purpose? Its purpose is to get you, the proverbial you, out of the shackles and confines of a system that was not built for you. It was not built for you to use. It was built for you to be confined in, to make sure that you stay exactly where we want you. And wherever we want you is whatever best serves the upper echelon. So we are now living in this weird little world wherein we're looking to a hyper central corrupt authority to create the rules wherein we all get to escape the confines of the thing that they make their money from, to leave it and become sovereign and independent and autonomous citizens in a world run by money. It will never work that way.
1,000%. And I think, that's exactly right. People are easily misled.
Mm-hmm.
And I think it would be better if people ask more questions, or, literally anything, right? Like just do anything to try to protect yourself. Like maintain skepticism wherever you go. Like I'm not saying don't believe somebody. I'm saying ask yourself if that makes sense, and does it make sense because it aligns with your confirmation bias and your anecdotal experience, or does it make sense because you can take a step back and view it holistically, right? Like, is it coming from a point of empathy, or is it coming from a point of, oh, thank God I'm right? Like,
Yes.
and I think that just happens so often, where it's, questioning your reality is very uncomfortable. The act of questioning your reality is the origin of crypto, and saying, does it have to be this way, or can we create something different? If we create it digitally, it's accessible all across the world and they can't stop it, right? Like, that's super empowering. And I think being told you're right and someone is going to fix it on your behalf is also validating and empowering. And I think that's how we get to this point where people want specific things done because they've been told by people that they trust. KOLs, is it a congressperson? Is it an influencer? I don't know, right? They've been told by people that they trust that this is the answer and this is going to help them, or it's going to help us, right? But, us is left undefined. And people, yeah, it's just like, it's just so easy to turn your brain off and say yes. Like if you just consider the human experience behind it, right? When somebody sees that you're like struggling with anything and steps in and gives you a hand, you might like feel a little bit awkward about it at first, but you're like, oh my God, all I needed was like a little bit of help. That's so much better, right? Like, it's such a huge relief. And to just dump that anywhere else but your own culpability and, another thing on your to-do list, it just feels good. And I get it. I fully get it, right? That's it. And like, that's.
So I want to answer as we wrap up here. I think we can maybe both give our thoughts to Chris's question, because genuinely I think it's the perfect question to wrap on. You good?
Yeah, I don't see the question, but yeah.
I'm about to tell you.
Okay.
So the question, this is such a good question for multiple reasons, and I love that it was asked this way, because it's the perfect way to think about, like I keep saying, this is the perfect way to think about the impetus that you would need to get into a system like this. What do I do to escape this with a small amount of dollars? And the reason that I love it is because the biggest misconception with all of this, particularly with DeFi, is that it's not for you unless you have a gajillion dollars. And that's such an unfortunate and like deeply saddening attitude that is perpetuated by, again, people with a very weak grasp on this stuff. Perfect question. What I would tell you, without even naming a specific thing, because there are different opinions and you can value different things and you can be into different things, and I don't want to push someone into a specific box to like start a rabbit hole. Take money. Let's just talk about the vague concept of money briefly. Tokenize it. What does that do for you? That allows you to remove it from a point of central custody and put it in a place where you control it and you're responsible for it. Then, from there, find a community, or they're often referred to as protocols, wherein other people agree with your desire to escape the confines of the central money system that you just removed your money from and tokenized it, and then just put it to work. And here's an example. An example would be if you hold dollars or euros, you could take a dollar or euro backed stablecoin, remove it from your central bank account, and put it into some protocol wherein it gets lent out to people. All you need is the one asset. No need to start with multiple things and volatile prices and all that stuff. Start small and just put a little bit to work, and notice the difference in the interest that you can earn when you're the one controlling where it goes and who gets it and what they do with it. And that's it.
Totally. Yeah. So DeFi has all of the nifty tools that we love to make money from, right? Like compound interest. All of those things happen. I think if I had a small amount of money, I would just put it into like a vault of various services. And I don't know who we're allowed to name by names, but like
anyone you want.
So like almost all of my crypto is in like a Beefy vault or a Meteora vault. Okay. And they compound automatically. They're pretty efficient. It gives you a really nice breakdown. There is impermanent loss. That's a real thing. I'm positive you guys have covered impermanent loss before, but like, yes. But like it's compound interest. You're benefiting from compound interest. And if you can add more money in there eventually, but like don't feel pressured by it. And if you need to take it out, take it out. But like you're going to do better there than you would ever do in like a bank account, most likely a CD, and a CD is locked. So like that's definitely hard agree. Definitely a place I would start with like just a tiny bit of money and like finding that community also because a huge effort in crypto that I think is maybe, a little misguided, but I benefit from, so I don't care, is things like airdrops, right? Where like, oh, if you participate early, even if you just put $1 in, you're gonna like benefit from some sort of an airdrop.
Mm.
And that is, I don't know, kind of like a fun way to get started. Like you need a little bit, but like, yeah, that's where it's at. Someone said they're staking ETH on MetaMask. I don't know why MetaMask steals all of your data, but they slow down your transactions and you pay more in gas because they do. Um, so yeah, we're
And
supposed to wrap this up.
it's okay. You and I both know that we could do this for 6 hours, but
Yeah, why not?
I just think so. I feel like it's so easy to fall into rabbit holes and tangents with a topic this big because it can go a million different
True.
directions, sort of by design. It's intended to be confusing because that makes it harder to use, and a lot of people stand to benefit from you not learning how to use it. So I do want to end with this idea that there is an escape hatch, and that hatch is
Yeah,
DeFi,
absolutely. Yeah.
and I truly believe it's inevitable. And you can learn
Right.
so much about the very beginnings of getting started. Someone asked, like, what about earning interest through Coinbase for holding USDC on the platform? I would genuinely say that's a fine way to start, wrapping your head around the concept that your money getting put to work makes someone a lot of money, and that someone,
Always. It's normally the bank.
it should be you.
Yeah.
And so
It's the
even
bank,
if
it's the credit card company. Yeah.
Coinbase is giving you the average rate that your high yield savings account with I would say theoretically fewer restrictions, but also a couple more potential downsides, just given potential for platforms to experience outages, go down, get hacked, whatever. Like all these things that exist with banks, that exist with whatever. And we could debate, the importance of FDIC insurance. I'm sort of like a known critic of FDIC insurance, just because if you read the fine print, it doesn't cover some certain stuff. And those are like the things that people experience a lot because, of course, it's an insurance company at the end of the day. And their biggest motive is make sure we don't have to pay out that many people. But I would say that baby steps are the way to do it. And I believe that decentralization is a spectrum, and it's fine to start walking that direction while still relying on frameworks that are like familiar. And so absolutely earning 4.15 or whatever it is percent APY on USDC held in a Coinbase account, absolutely nothing wrong with running that as a method to start.
So I think something that's just frustrating as a member of a capitalist society that a lot of people face, especially with like the divides between the classes at this point, is that people want to be further ahead than they are. And it is much harder to achieve closing that gap than it is to pretend you have closed that gap through things like consumption, high balances in your accounts, gambling for higher payoffs, all of those like behaviors that are ultimately detrimental to you. Where it's like, I want to join flex culture, so I'm gonna like make a really high risk gamble and hopefully it pays off. And it pays off every once in a while for like somebody, and that's what makes you think it's going to work. But the entire idea of like risking more than is going to create a comfortable environment for you is what gets people in these like really bad situations. And like you see it, and I'm not just talking about like crypto and gambling, you see it every day. Someone's got like a $100,000 truck with a $1,500 payment for 10 years on it. You're like, what are you thinking, bro? Like that car is going to be upside down by year 3. That's nuts.
Year 3.
But it's just that.
Year 1.
It's
good friend of mine bought a Land Rover, a Discovery.
Oh, see, that's different. But yeah.
Yep, same exact thing. It was like a $100,000 vehicle. Went in. I don't even know if it was a year. And between depreciation, we're underwater, and there was no way to get out from it. Just had to cut the loss because it was just getting worse and worse and worse and snowballing.
God, it's just like, it's upsetting to watch. But I think what that comes from ultimately is people not being real with themselves and where they are on that journey, right? Like, I'm not buying Lululemon yoga pants. I buy them at Old Navy because they're $15, right? Like that's a big difference. Like, I don't want $120 yoga pants because that is not a product for me. That's a product for not me. But I can see why they want me to think it's for me, because then they can take more of my money for something that's defectively the same. Right? Like that's kind of like, and that's how people get into these positions and get into these mindsets and get absolutely exploited. And then they're looking for a scapegoat, and somebody says, here they are, I'm going to help you, come with me. And now we're collapsing the dollar. So yeah.
So just I've seen the questions come in, just asking about, more step-by-step help kind of getting started with this world of entering the DeFi space. 100% can make videos. Evan's got videos. Will's got videos. If you've seen the morning show or After Dark, that's a great place to start too. We are actually going to be live in 3.5 hours with After Dark getting started with, it'll just be me and Will tonight. And we can absolutely throw up a screen share and go through a couple basics about, doing that preliminary onboarding into, like I said in the comments, a single-sided asset provision for yield. Sounds complicated. I promise it's easier than it sounds. They just had to make it full of jargon because that's the way of the world.
Hell yeah.
But the other thing that we can do is just put up more individual videos, and we're going to cover it more on this show, just because one of my goals with this is to kind of frame that the regulatory landscape is really not being designed to support DeFi. And the answer to escaping all of this nonsense is really truly to lean into that world. That's how you
if you're looking for a big come up, regulation is not what you're rooting for. Just
Yep, 100%.
That is not that's not going to make it. That's not going to make it inflate.
If you've enjoyed this, Emily and I will be back with.
Enjoyed it.
Me too. This scratches like all of my nerdiest itches that never get scratched. So I'm very excited that we're doing this. We will be back for episode 3 next Wednesday at 3 p.m. Eastern, and we will be most likely joined by both Lindsay and Katie again next week to have the full panel. Definitely,
it's like a girl's bathroom that you snuck into. I love it.
I just built a show with a panel of people who are all smarter than me, so that I can sit here and absorb stuff and ask questions and give you guys the chance to talk about things that you just know so much about. So I definitely want to dive into some more specific genius stuff next week. Emily, we started to broach the topic of seigniorage last week. We did not get a chance to explore it. Another thing I brought up on David's live last night that got no attention and we skipped right over. So next week, I definitely want to start there and give you the chance to set the stage for that. So tune in next Wednesday right here, all of the places that you watch any Rise Up programs, 3 p.m. Eastern next Wednesday. And then, like I said, of course, we'll be back tonight for After Dark and tomorrow morning for the final show of the week for the Rise Up Morning Show. Back again next week, all that good stuff. Probably going to be sans Evan next week. He's traveling to spend some time with family, and he's been going real hard lately. Still playing catch up post Argentina. So if you want to see more, definitely tune back in for that. And then Emily, any final thoughts, music anecdotes, words of wisdom?
I'm just laughing that Solom Spartan keeps asking for a POAP. Like, I didn't realize we had a POAP KOL in here.
We love POAP.
That's funny.
And the crappy part. Oh,
why?
Because it's such a cool. It's
just
one of
trinkets. Okay,
yes,
that's fine.
It's one of my favorite, easy to understand onboarding tools. I love it.
It is very easy to understand.
I love it. It hasn't had to change in design for years, and it still works. And I have so many of them, and all of them. The thing is, we really need to yell at me about that before the show starts, because Evan is my ace in the hole for POAPs, and if he's not here with me, I don't do it. Leif, we do love POAPs. We give them out all the time. Usually for at least every 100th episode gets its own POAP.
Somebody
need to do more.
Somebody was, I know what it was earlier. I wanted to address this now that we're, wrapping stuff up. Somebody had said that the thing they don't like about airdrops is dusting. And if the audience doesn't know what dusting is, it's basically where you pick a smart contract interaction and you get all of the all of the wallet addresses that occurred with like that specific smart contract, and then you use the wallet addresses as a way to get product distribution, right? So like if you open one of your wallets um, in a wallet app that's like less, I don't know, less kind of corporate, it'll show you or like just go on the scanner, right? Just go on like either scanner, Soul Scanner, whatever. It'll show you a tremendous amount of what's called dust, right? Like tiny amounts of tokens or like fractions of tokens or like random NFTs. And like at the start, I don't know, back in like 2020, 2021, people were getting huge amounts of like Polygon NFTs in there, and they were all going to the hidden tab, which was like very funny. But like OpenSea wrote the book that they would become spam chain. And now they have Polymarket. So, okay. So anyways, someone was saying that they're worried about dusting. And I think it's important to know about a self-custody wallet that you can only control what goes out. You cannot control what goes in, but that's fine because there's unlimited space. So all you have to do is like organize it into the corner. Oh no, someone dusted me. Don't sell what gets dusted. Leave it. Don't burn it. Don't touch it because you might accidentally give someone a permission that you didn't quite realize. But like it's no biggie. It's like annoying. You can like migrate your wallets every once in a while and like take all your good stuff and leave your trash behind.
It's like getting a new email address when too many scammers have it.
Totally. Yeah. The same diff. But yeah, I just wanted to like address dusting as a concept because somebody had mentioned it, and like I mean if you interact with it, something crazy could happen, but like don't touch it. It's fine.
Beautiful. I love that as a final thought. I will make mine just my standard PSA, and we'll keep it short, and ask me if you need clarification, because this is such a huge problem. And I'm excited. I'll give you an exciting piece of news about this. So the scam that I want to just constantly do everything I can to make everybody aware.
I love a scam.
Please be very careful. It's still just prolific as ever. There is no such specific thing as Web3. There is nothing for you to connect to. There is no...
no.
I mean, listen.
That is a bummer. God.
No, listen, you would not even consider it like being on crypto Twitter, because it would just get laughed out of the room. But I posted a PSA on Facebook last week, and hundreds of comments of people like, what do I do if I've been contacted by this? I thought like blah, blah, blah. I thought this, I thought that. It sounds like this, whatever. People who run this know exactly who to target, and they have made away with hundreds of thousands, if not millions of dollars from people.
Sure, it's millions.
I mean, I specifically talked to someone 2 weeks ago who lost $1.1 million in a pig butchering scam started by this.
Money.
It was everything they had. And to be the one who has to sit there and be like, there's literally nothing you can do. It's gone forever.
I mean, you can try to cry to Zach XBT, but like, oh my God, that sucks.
So just please know that that's not a real thing. There's nothing to connect to. You do not need to secure a wallet with Web3. You don't need to transfer assets to Web3. If you do, if someone sends you a website and they offer to help you with it, whatever, do not just block it. They can't hurt you if you don't send them anything. Just ignore it, block it.
I think the best way to help yourself assess if something is going to scam you or not, when it comes to crypto at least, is if you just ask yourself, is this decentralized? Right? If someone says, oh, you have to send it to me or I'm going to break it, and you say, is this decentralized? No, they can't break it because they would need consensus, and I never gave them permission. Like, that's what it comes down to. Like, is this decentralized? It's still too much?
Too much.
All right.
Literally, this is where I've ended up. Don't respond to DMs from people you don't know.
I was like, no, don't. So I have to text you now.
Don't reply to DMs from people you don't know.
It's not good.
Treat it as if.
Listen, don't reply to DMs to people that you do know, because people steal accounts all the time.
It's the second location theory. Don't let someone you don't know especially get you to a second location. That's where bad stuff happens.
Yeah, you never go with the kidnapper or the creepy guy at the bar.
The exciting news is that the last time we spoke to SEC Commissioner Peirce, she expressed interest in helping us organize like an actual national PSA campaign for this exact thing.
Sick.
So working on putting some stuff together, and her office has expressed interest in putting us in touch with people that can help us disseminate it properly. Very excited about that, especially because it's a two-parter. If you have fallen into this trap, you will almost certainly get hit with the "I can recover your assets for you," which usually comes from the same group that got you the first time. You always have to pay them a fee. You'll never see that fee again, and you'll never see them again. It's probably the same person.
Oh, Grandma, don't.
It's horrifying, and it's so sad, and I hate getting those DMs. It's heartbreaking to read them.
There is no Nigerian prince that's in love with you that also looks like Richard Gere.
We just don't do ourselves any favors as an industry, because we kind of talk about the importance of securing assets and not your keys, not your crypto. And we've sold that so hard for years, and it created the perfect incubation for this scam, which is now wreaking more havoc than any single scam I have ever seen in all my years doing this. So please be careful if you have questions.
Connect to Web3, huh?
Mm-hmm. All right, that is all the time we have. I will see all of you hopefully tonight at 8 p.m. Eastern with Will for After Dark. Bring your questions. We can definitely do some DeFi walkthroughs. Otherwise, we look forward to seeing all of you guys next week for episode 3 of Trust Issues with Emily, with Katie.
Gang's all here.
With Lindsay. It's going to be awesome. Thank you so much for spending time with us today. And until next time.
Ooh, real quick though, and if you're still here and you want to, if you would be interested in a Trust Issues book club where we talk about policy-related books, let us know in the comments or like any of the places that you talk to Alex and Rise Up, because that was something that we were like joking about, but like we have recommended like 5 books to each other since we've like started planning it, and we plan to do that like once every couple of thingies. And we'll send you an Amazon affiliate link.
Community.rumshq.com is the free to join circle where all of us hang out and talk when the show is not online. It's the place where the show lives 24/7. We can definitely start a trust issues section where we can collect questions and all that kind of stuff. We can run the book club out of there. That would be awesome.
Hell yeah. Yeah, because we probably like talk about it or like use it as like we always reference books as like a center point of our discussion. And I think that it would be good to let people in on the books that we love and talk about all the time that like help establish our own, unique perspectives. So yeah. Anywho, sorry. Now we can end.
Now we can. No, that was a great stall.
Yeah.
I will see all of you later. Thanks for spending time with us.
Everyone got a 75% bonus for this episode. Go team.
Hell yeah.
Okay.
Bye.